first off, I do have to ask you about the reports that Aramco has restarted IPO talks. Your response?
Well, we never stopped. We suspended a little bit as we were preparing for the transaction with the PIF to acquire 70% share of SABIC. That has gone extremely well, and we're now in the process of getting the antitrust authorities around the world to clear the transaction, but we're very optimistic that it will close sooner rather than later. We also wanted to test the investment community with the bond IPO, which went extremely well, as you know, and we had unbelievable demand on the offering. So both of them, we scored 100 out of 100, and we think the markets are in a good place in terms of global equity markets. We think the outlook for oil is good and is going to improve as we go forward and the markets are rebalanced, and we will be in a good place in 2020 to do the IPO. Fortunately, everything is prepared. The company has done its homework and is in fantastic shape to be listed, and the government has also done all of the regulatory issues that it needed to do to prepare for the IPO.
How do you feel about demand, sir? Because our Federal Reserve is talking about cutting rates. The ECB is talking about cutting rates. They fear that global demand in the economies are going to slow. How do you see it?
I see it the other way. I think these stimulus steps that are being done by monetary authorities are precautionary in nature, but they're certainly going to have a positive effect in terms of fueling economic growth. I think the fact that we've had soft prices for oil and energy in general is also another stimulant for global energy demand. I think we've had some one-off factors in the first half, such as weather in the U.S., that have dented demand. I think we had the trade issues in the first half, which have disappeared with the Osaka agreement between the U.S. and China. All of these clearing, I think, is going to give us a big push for demand bouncing in the second half. And with the discipline that we already have on production from the OPEC Plus and the reassured commitments of conformity that we've heard from the couple of countries that were not fully compliant, gives me reason that the markets will rebalance very, very strongly and very, very rapidly in the next few months.
Prices are likely to rise, as you see in the second half.
Well, I see markets rebalancing. I see fundamentals going strongly in the right direction, and prices will, of course, be influenced by other factors as well. I cannot predict where prices are going to be. What I can predict is that you will see inventories going down.
One more, please, sir. You made some comments last night to my question about the Permian Basin. You've spent a lot of time in Texas, by the way. I know you know Texas very well. The Aggie ring, I know. I'm hokey, so I can't. How fast do you see the Permian wells draining? Do you think that we overestimate the longevity and the life of these wells in West Texas?
I think it's not just in West Texas. All shale oil wells do decline rapidly, 70% of them. Obviously, in the U.S., there is a fantastic service industry that keeps on drilling and fracking and completing the wells. But it's going to take a lot more money and resources to keep existing production base because of that decline. And any incremental production requires, of course, a lot more. We will need time to understand the geology and how much can we increase production. But in all cases, just like any other basin, there will be a plateau. There will be a plateau ultimately of all of these unconventional resources in the U.S., the Permian being one of them. Is it in a year or 3 years or 4 years? I don't know. But certainly it's not indefinite. I mean, I think it's really an oversimplification to assume that we can extrapolate a straight line forward and just assume with the same number of rigs that we have that oil production will continue to increase at 1.5 million or so a year. So I see production ultimately plateauing. Is it in 2 years or 4 years? time will tell.
Do you worry about U.S. debt levels? Have U.S. oil and gas companies taken on too much debt?
Well, definitely they have not been generating enough cash flow to their investors. And I know that's impacting the appetite for investors to continue putting money into unconventional resources. So the combination of infrastructure, which has constrained, the combination of service industry constraints, financial constraints, as well as the unknown constraints of geology will ultimately bring us back to reality that there has to be a plateau and ultimate decline. In all cases, we have the conventional resources ready to deploy and step in when it's time. We're comfortable with where our production level is. We're willing to go either way from where we are today to keep markets balanced. We're happy to have 23 other countries join us today, not only in a 9-month extension, but in a permanent framework to continue to analyze and preemptively step in to prevent imbalances from taking place in the future.